The world of money is changing faster than anyone expected. And if you thought gold was the only precious metal that governments trusted, think again. Because starting April 2026, India, one of the largest economies on the planet, will begin officially adding silver to its national reserves. This decision may sound technical, but it's not. It's revolutionary. It could change the global balance of wealth, rewrite how central banks store value, and potentially send silver prices skyrocketing. So, what's really happening here? Why is India, after decades of focusing on gold, suddenly turning its attention to silver? And what could this mean for the future of money, inflation, and your own savings? Let's break it down. The turning point for decades, gold was the ultimate financial anchor for countries like India. It was the symbol of security, the metal behind every promise. When central banks needed to stabilize their currencies, they turned to gold. When they wanted to hedge against inflation, they turned to gold. And India, a country where gold has deep cultural and economic roots, was no exception. The Reserve Bank of India has always recognized gold as a reserve asset, something tangible that holds value no matter what happens to the global economy. But now, for the first time in history, that same recognition is being extended to silver. Starting April 2026, Indian banks and the central bank will begin accepting silver as a reserve instrument, meaning it can be stored, traded, and used as collateral, just like gold. It's more than a policy shift. It's a signal that India, like Russia and Saudi Arabia before it, no longer fully trusts the global monetary system built on the US dollar. The global context. To understand how big this is, we have to zoom out. Over the past few years, the world's financial system has started to fracture. Countries within the BRICS alliance, Brazil, Russia, India, China, and South Africa, have been actively working on building an alternative to the Western-dominated economic order. First came Russia, which began accumulating silver reserves quietly after 2024 sanctions. Then came Saudi Arabia, diversifying away from oil-backed dollar reserves. And now, India has joined that list, officially confirming that silver will stand beside gold as a strategic store of value. This isn't random. This is coordination. Together, these nations represent nearly half of the world's population and a growing share of global GDP. And they're collectively moving toward a system where real assets, gold, silver, energy, and commodities hold more weight than paper currencies. In other words, the global game of money is shifting from fiat to physical. Why silver? Why now? For years, silver was the forgotten metal. Investors focused on gold, tech companies consumed silver quietly, and governments mostly ignored it. But the truth is, silver has been quietly outperforming expectations. It's both industrial and monetary. It's used in every solar panel, every electric car, every smartphone, every high-speed data cable. It's critical for clean energy, modern electronics, and medical technology. At the same time, silver has always shared a deep historical link to gold. For centuries, currencies were backed by both metals, known as bimetallism. Now, as India recognizes silver again, history might be repeating itself. Think about it. Global industrial demand for silver already exceeds annual mining supply. According to multiple reports, the silver deficit has grown for 5 consecutive years. That means even without governments buying, there's already less silver available than the world needs. Now add a country like India, with 1.4 billion people starting to stockpile it as a national reserve asset. That's not just demand, that's an earthquake in the metals market. The hidden strategy behind it. So why is India doing this? It's about sovereignty, monetary independence. By holding silver alongside gold, India diversifies its reserves. It reduces reliance on Western assets like US Treasury bonds and strengthens its position within the BRICS economic alliance. It's also about hedging inflation. Right now, almost every major country is battling inflation. Central banks print more money to fund deficits, which devalues paper currencies. Silver and gold don't have that problem. They can't be printed. They can't be created out of thin air. By adding silver, India is essentially saying, we want our reserves to hold real, tangible value, not just numbers on a screen. And that message resonates globally. The chain reaction. What happens when India makes this move? Other nations take notice. China already has enormous influence over the global silver market, not only as a consumer, but as a refiner and investor. If China decides to join India in recognizing silver as a reserve asset, that means 1/3 of the world's population would be living under a monetary system that values silver as much as gold. And if that happens, the rest of the BRICS countries, Brazil, Russia, South Africa, will almost certainly follow. We're talking about a potential new standard, a dual metal reserve era, where both gold and silver become anchors of global finance. Some analysts are already calling this the start of a silver standard 2.0, the gold-silver peg theory. Here's where it gets even more interesting. There are whispers that India and China are exploring a gold-silver peg, a fixed relationship between the two metals. Historically, this existed for centuries. For example, during the Roman Empire and up through the 19th century, silver and gold had fixed exchange ratios. If this peg returns, it would mean silver's price would automatically adjust to follow gold's movements. Right now, the gold-to-silver ratio is around 84.1. That means 1 ounce of gold equals 84 ounces of silver. But historically, that ratio averaged closer to 15.1. If India and China decide to reset the ratio anywhere near that level, silver's price could increase 5 to 10 times almost instantly. Let's do a quick example. If gold remains at $4,000 per ounce and the new ratio becomes 25.1, silver would need to trade at $160 per ounce to stay in balance. If the ratio moves to 15.1, silver would be worth $260 per ounce. That's a once-in-a-lifetime revaluation. The Western response. So what will the Western financial system do in response? Most likely, they'll deny it at first. Just as they dismiss the BRICS de-dollarization efforts, they'll call this symbolic. But once silver prices begin to surge, once central banks start reallocating reserves, and once industrial shortages worsen, they'll have no choice but to react. Western countries will be forced to increase their own silver reserves, either directly or through strategic stockpiles. And that's where things could spiral. Because the global silver supply is extremely limited. Unlike gold, silver is mostly a byproduct of other mining operations, meaning production can't easily ramp up when demand spikes. So when governments, investors, and industries all start competing for the same limited metal, the price doesn't just rise, it erupts. The inflation catalyst. Now let's add another layer: inflation. Everywhere you look, the United States, Europe, Latin America, inflation remains stubbornly high. Governments are trapped. If they stop printing money, their economies slow. If they keep printing, inflation gets worse. And through it all, precious metals rise. Gold has already broken multiple records. Silver historically lags behind gold in such cycles, but once it catches up, it often outperforms. During the 1970s inflation wave, silver prices rose tenfold within a decade. Now, with industrial demand, government accumulation, and inflation all colliding, the stage is set for history to repeat itself, possibly on an even larger scale. The Silver Squeeze 2.0. If you remember the 2021 Silver Squeeze movement online, that was retail investors trying to push silver prices higher. Now imagine that same squeeze, but instead of Reddit traders, it's entire nations doing the buying. That's what's about to happen. India's decision acts as a green light for other countries to start accumulating silver legally, strategically, and publicly. The difference this time is scale. This isn't a few $1 million worth of silver. We're talking about billions, maybe even trillions of dollars shifting into physical metal. What it means for the future. So where does all this lead? If the trend continues, the world could enter a new era, one where both gold and silver form the backbone of international trade and currency stability. The BRICS nations might eventually issue a new trade settlement currency backed by a mix of gold, silver, and commodities. That would fundamentally challenge the US dollar's global dominance and give emerging markets more power. At the same time, it would make tangible assets, metals, land, resources, far more valuable than ever before. In simple terms, we're watching the return of real money. What it means for you, so what can individuals take away from this? First, awareness is everything. When nations move, markets follow. Understanding that silver is no longer just an industrial metal, but a strategic reserve asset, gives you insight most people don't yet have. It's not about short-term trading or hype. It's about recognizing a paradigm shift in how value is stored and protected. If governments are buying silver to protect themselves from inflation and currency devaluation, it might make sense for individuals to at least understand why. Because when history turns, it doesn't send invitations. It just happens fast. India's decision to begin accepting silver as a reserve asset marks a profound turning point, not only for its economy, but for the world. It's a statement of intent, a declaration that the era of fiat money dominance is fading, and that tangible, physical value is making a comeback. When you connect the dots, Russia, Saudi Arabia, India, and potentially China, you see a clear pattern forming. A pattern that could reshape global trade, redefine wealth, and ignite one of the most powerful bull markets in history. Silver, once overlooked and undervalued, is stepping back into the spotlight. And as nations race to secure their share, the window of opportunity for early recognition is closing. So as we stand on the edge of 2026, one question remains. Will the world embrace a new silver standard? And when it does, will you be ready? If this helped you see things differently, drop a comment and we'll answer your questions. Subscribe for more honest finance content, and remember, smart money doesn't sit. It moves.